Right, very quick look summary of the chart pattern video. You can see I put this line at 55 250 on this price line here. So this was massive resistance up here throughout 2011, and then we had the underlying price action was here. We had a reversal bar down here, so we had a lot of resistance above and a lot of support below, and we'd already come up from quite some way. So this was a bullish consolidation, massive accumulation pattern down there, punctuated by a drop underneath the main support, which was common. That was the main support. And here, this often symbolises the end of a consolidation pattern when you breach the main box area. And here we breached it on the 4th of October 2011. Pushed back up to resistance, saw a lot of selling again, came back to the top of the box, threw in a hammer on the 15th of December, and then ran all the way to April 11th. Okay, so basically you've got a box, you've got this big buying pattern to the upside. All these pullbacks are bought, so you could just trade the range. You could just trade the range by 1, 2, 3. There's no buy signal before that breaches that anyway, because it's all red, so that's fine. You could buy that one. You could get a small run into the 200, and you buy the next bar once it holds the box. So you've got 1, 2, 3, 4 trades. So that's June, August, October, November, December. Now you don't know when this is going to break. So when you get up here, on any particular point, run your stop up, 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 break. Okay, and that's a typical institutional accumulation pattern that creates a box that gets breached, and then creates the run. Just imagine if you'd done this, if you'd let me get my pen. Bought one position, sold half, and kept it with a stop under here. Bought one position, sold half. Bought one position, sold half. Bought one position, either taking it off on that sell signal. Bought one position, managed to stop. So you would have 1.5, 2.5. You'd have 2.5 size position for the breakout. Easier said than done. This is over a long period of time. So you could have just bought all in, all out, all in, all out, all in, all out. Probably even itself out, to be honest. Once it breaks the box, use the depth of the box as your target. So that was the actually, if you use the full depth of the box, including that breach, that just about gets you up there. Okay, classic chart pattern. Very, very bullish accumulation pattern. Next one, let me think of, and let's see what happens up here. Now, once we gap down, what do? We hold 55, 270. Push up, close the gap. What do? We hold 55, 270. Gap up, pull back, move up. into resistance. So take it off. Why not take it off? It pulls back here. So this becomes a key level now. So the old level here, 55,270, gets superseded by this level here. So in December 2012, we get a repeat of December 2011. Big box pattern, early December breakout, pullback, and we wind up. This was a fantastic. This is such a good technical stock, and then eventually through 2013 into early 2014, we don't even get a box. We just keep climbing up. Okay, so great chart pattern. And so where are we now? We are hitting resistance levels. The new line in the sand for this one is 108.50. We've breached this. This is a nice three-wave reversal pattern. That funnel pattern is very, very powerful. So to trade a funnel pattern, do the usual, low RSI, potential buy signal, a lot of selling to the left of you, does a repeat W pattern, very, very common pattern, holds and breaks, and eventually gaps. Very liquid, very technical stock. And works well. So one to watch. If I strip all this away, watch out for, if we really get coming to a lot of selling, watch out for the 100 mark, massive number. So this to me, this is a lovely setup, just based on that behaviour around the big number. And there's the big number, 100, smack on. Okay, so I would, and the real line of fire is 108. But just see what happens around 1113. Let's alarm that. The price line will have to go in my watch list. Right, where are we now? Let's find another one. Let's find a good. We talked about oil, didn't we? Let's talk about oil. We're getting very close to the. Okay, I'll let the first 5 minutes go on the Dow break open. This is the wedge breakdown. There's the trend line, so it's coming right underneath this one. There's the resistance levels. So we're in an apex. We keep selling at 104.80. So we sell. It's a sell zone up here. So we sell, sell, sell. Come out of the apex on a nice hammer on the 55 EMA. We breach this wedge pattern and immediately come into a sell zone where there's a lot of history of selling, hence the name sell zone. So we can't hold that. We see a lot of selling over 2 weeks. We eventually break down the wedge, pull back to the wedge, the 55 EMA gets sold. Fatal 55 EMA, once you breach it, is very common, particularly on the breach of a trend line, and then we just leg it down. So we leg it down, we pull back, we consolidate, we break down. We leg it down, we consolidate, we leg it down, we pull back and consolidate, we leg it down, we pull back and consolidate, leg it down, pull back, consolidate. Let's quick look at the euro, and then we'll look at final chart pattern. This was the funnel pattern up here. So we had a high on 2013 Feb, December 13, March 14, big spike up on May 8. There's the trend line underneath. Once it's a massive big sellers bar up there, huge big sellers bars, no pullback unfortunately. If you're a day trader and you get short up here, it just breaches, narrowly misses the 140, the massive number, by about 6 points. Sells. If you're a day trader, hold it. If you're a swing trader, you don't get a pullback. All you can do as a swing trader is wait until that legs it down and pulls back. And that sell signal is on. This was massive support. 136, 137 was massive support. So we pull back to 137, and then we start to leg it down. Okay, so here's the M pattern. Typical, very common pattern, and then we just start to wind it down. So as soon as you get the pullback, just short any pullback, particularly with high stochastics. And so on. Alright, that is in short my summary of chart patterns, and we'll do more work on that in the future.